Hello and welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Well, in case you're wondering why I'm in this get-up, well, it's Independence Day Eve, and of course, tomorrow being a market holiday, we are celebrating Independence Day throughout the network on Independence Day Eve itself. So yes, in terms of cues as well, there's lots to watch out for today, given the fact that in the last leg of earnings, things have been looking up. The likes of Nykaa, Hunasa, posted good set of numbers, and we saw the price action as well. Stock prices saw good 5% up move there, and a lot of other sectors like autos, metals have been doing well. And of course, the market also managed to hold on to the good gains that we saw yesterday. We had a steady, performance from the benchmark indices and the broader end of the markets as well throughout the session. And 24,700, that would be the next level to watch out for. 24,702, that was a recent swing high. If we can cross that, perhaps we could see higher levels. We'll of course touch base with our technical expert and ask him how the setup is looking like for today and of course for the next week as well. Today of course is also the weekly FNO expiry. So yes, lots to watch out for, lots of stocks in focus, and of course your stock related queries will also be in focus. So keep them coming in, we'll try and get them addressed by our experts. But before we move any further, take a look at the top headlines at this hour. Wall Street extends gains for the second straight session with the S&P 500 and Nasdaq hitting another fresh record high amid expectations of a rate cut from the Federal Reserve in the next policy meeting. Dollar weakens further while treasury yields fall. Asian markets opened mixed this morning. The Nikkei falls from record highs while Taiwan and Hang Seng continue to rally. The GIFT Nifty is, however, indicating a muted start for the Indian market. Oil prices fall to over 2-month lows on bearish supply guidance from the US government and the International Energy Agency, while gold prices gain as investors ramp up Fed rate cut bets. And ICICI Bank revises 50,000 rupees minimum balance requirements for new saving account customers to 15,000 rupees following feedback from customers. The bank says that they have revised the minimum account balance lower to better reflect customer expectations and preferences. And US President Donald Trump warns that Russia will face very severe consequences if President Vladimir Putin doesn't agree to end the war in Ukraine during their meeting on Friday in Alaska. Well, good cues from the global markets this morning, but the GIFT Nifty hinting at a muted start. Quickly take a look at what really happened yesterday. We reclaimed that 24,600 mark, and pharma, metals, autos, these were once again doing well. Mid and small cap indices managed to outperform benchmarks. You saw the mid cap index faring much better than the headline indices. Market breadth was in favor of advances. The Nifty Bank, however, did underperform the other indices, and it did end in the green, but it was a relative underperformer. Autos continue to see good buying ahead of the festive season. In terms of stock movers, there were quite a few reactions to earnings, but if you look at the fund flows, foreign investors remained net sellers to the tune of 3,650 crore rupees or thereabouts in the cash market, but DI buying support continues. The figure was somewhere around 5,600 crore rupees in equities in the cash market. The put call ratio once again rose to 1.02 vis-a-vis 0.78 in the previous session, and no new additions or deletions from the FNO ban list, but couple of or 3-4 stocks remain in the ban list for today. The likes of PG Electroplast, PNB Housing, RBL Bank and Titagar Rail. But on that note, let me bring on board our expert for today. Joining me is Chandan Taparia, Senior Vice President, Head Derivatives and Technical Research at Motilal Oswal. Chandan, lovely having you here. First of all, wishing you a very, very happy Independence Day in advance. I can see that you are also in ethnic get-up. Talking about the markets, we saw good traction. We managed to hold on to the gains, and it was a steady day, so to say, for the market. Today, are we poised to cross the 24,700 mark? If yes, what is the kind of upside that you would be envisaging, given the fact that today is also the weekly FNO expiry?
Suprabhat, Jai Hind, Vande Mataram. So yes, the market is finding some support, but before that, I think Dil Hai Hindustani and we all are celebrating a special day of the nations and the proud moment for us that now India is fourth largest economy of the world. And the way we are growing, I think long way to go. So I think this is an important eve or important day to celebrate the milestone which we achieved. And I think it's proud for each and every Indian. Talking about the market setup, we have noticed that Nifty has been finding multiple support near 24,350 for most part of this week. 3 to 4 times it took support near the same, headed to 24,750, failed to hold. But the good part is that on daily scale, the index is finding some higher base. However, on the weekly chart, still we are forming the lower top, lower bottom. But a small follow-up could negate the lower top, lower bottom, and that's why we are expecting some positive stance. We need to keep in mind that the immediate structure has turned in a range-bound manner, but supports are shifting higher. So now the 24,442 could act as a major support, and about 24,700, some short covering trigger can lead the rally towards 24,900. So I believe the muted start might provide buy on decline stance with major support of 24,442 for a drive towards 24,750 to 24,900 marks.
Okay, those are the levels to watch out for on the index. But what about the Nifty Bank Index? This week, if you see, the Nifty Bank Index has underperformed. Any levels that you would be keeping in your mind when it comes to the Nifty Bank Index?
Yeah, so talking about Bank Nifty, it has got stuck in a range from last couple of days. In fact, from last three trading days, it has been moving in between 55,000 to 55,555. We have noticed the declines are being bought, but at the same time, follow-up is missing at higher levels. So I believe it has to cross and hold beyond 55,555. Then only the major strength will be there. Otherwise, we have to play with the range of 55,000 to 55,555 as of now. The good part is selective PSU banks started to witness buying interest, but private banks got stuck in a range. So tug of war will be there between private and the PSU, and hold of 55,555 is very important if market gets to have some bullish stance in the bank nifty.
Okay, make note of the levels that Chandan just mentioned for the Nifty Bank Index. But Chandan, just about a minute to go for the market open. Any recommendations for our viewers?
So yes, I'll focus on selective counter. In fact, if I talk about the sector-wise positive on the selective auto name, whether we talk about Mahindra and Mahindra, Hero Moto, Hyundai, positive on the few metals name. Apart from that, news and business like Paytm, Eternal could be in focus. But here I want to recommend on MCX. The stock is bottomed out on the daily and the weekly chart. Yesterday, we have noticed the follow-up activity. In fact, the counter is finding some sustained buying interest. In fact, the longs are being built with rising delivery volume. So MCX could be first trading idea with support of 8200. It can head towards 8650 kind of level. So apart from MCX, I believe selective pharma counter could be in focus. On last trading session, we have seen decent recovery in counter like Lotus Lab, Apollo Hospital, Fortis Healthcare. So here we will suggest to go on Lotus Lab. Major trend of the counter was positive. Recently, it witnessed a corrective move, but now negating the lower top, lower bottom on the daily chart. So Lotus Lab could be other ideas with support of 850. It can head towards 900 kind of level. So Lotus Lab in pharma and MCX in capital market theme could be two preferred idea for the day.
Right. Okay, MCX and Laurus Labs and some of the pharma names among the top recommendations. But let's take a look at the markets then. We did have a quiet start, but we are picking up momentum. The Nifty is up somewhere around 30 points or thereabouts. 24,650. We are around about that level. The Sensex is up somewhere around 110 points. The mid cap index faring much better than the headline indices at the current juncture. It's up 0.3%. Advanced decline ratio almost 2:1, so skewed in favor of gainers once again, but we'll wait for things to settle down before really calling it a trend for the day. In terms of sectors, the Nifty Bank Index is extremely quiet, although it is trading with a positive bias. And I want to see what the other sectors are doing, especially the likes of metals, pharma, etc., because dollar index has cooled off further, so that should provide a further leg up to metal packets, metal pack in particular. It's trading with a positive bias, but it's kind of flat because last two sessions we've seen very good gains coming in on the metal pack. IT is also doing fairly okay in the positive zone. Autos marginally higher, but even this pocket has been faring very well in recent times. Pharma is also up 0.2%, but what's out of favor is the Nifty Private Bank Index. Aside of that, all the other sectors are trading in the green at the current juncture. The realty pack is also up somewhere around 0.5% or thereabouts. So, all in all, a positive start, no fireworks, so to say. But there is expected to be some bit of volatility given the fact that it is weekly expiry, and especially in the last hour of trade, we tend to see wild swings. But as of now, things are looking pretty okay. In terms of the individual movers then, take a look at some of the gainers. Infosys, of course, the stock is in news. We'll talk about that in just a bit. But that's the top Nifty gainer, almost 1.5% uptick there. Wipro closed second, up 1%. You also have some of the pharma names extending gains like Cipla and Sun Pharma, Dr. Reddy's as well. All the other tech names like Tech Mahindra, TCS are also doing well. Adani Enterprises among the top 5 Nifty gainers. HDFC Life also doing well. You have Eicher Motors, that's among gainers. Maruti, so some of these auto names also among top Nifty gainers, and so is Titan. That stock is also among the Nifty gainers. In terms of losers, right now the list seems to be a little shorter than the gainers list, but BEL, Bharat Electronics, that's dominating the laggards list, down somewhere around 1%. Tata Steel, ONGC, Reliance Industries in the red. Hindalco, that was a big gainer yesterday, 5% up move there yesterday, on the back of good commentary from the management, has come under some bit of profit taking, but that stock gained somewhere around 5% yesterday. Hero Moto, that was among the gainers yesterday, is witnessing some bit of profit taking. L&T, Shriram Finance, UltraTech Cement, these are some of the other laggards, and so is Axis Bank, Eternal as well in the red today, and so is SBI. But I want to talk about Hindalco, the kind of up move that it saw yesterday, and today of course some bit of profit taking. Should one use dips to buy Hindalco? Would you say that the stock is looking at some kind of an upside breakout?
Yeah, so Hindalco and selective metal counters have seen decent run up in last few days. The good part is Hindalco has formed the higher base, or the coal unwinding with put writing was visible in the counter. So I believe positive sense could be there in the name. So with support of around 682, one can look for an upside target towards 725 in Hindalco.
Okay, that's about Hindalco. But of course, Infosys is the other stock that's in news. It's the top Nifty gainer, up 1.5%. The company will be buying 75% stake in Telstra unit for $153 million. I think some brokerages have also come out with notes on Infosys, and they are pretty much upbeat, with Nomura, giving a buy call, target price at 1880. Fair bit of upside. The stock is somewhere around 1450 or thereabouts right now. You also have Morgan Stanley that has an equal weight rating and target price of 1700 rupees or thereabouts. Now, a lot of technical experts I spoke to have said that for Nifty to see a meaningful leg up, we want, or we should see some bit of an upside in IT. IT needs to really fire up to provide that leg up to Nifty. Would you concur with that? And if yes, which are the stocks that are looking poised to see a good up move from here, from the large cap pocket?
So yes, as you mentioned that Infosys has bottomed out. In fact, in last 3 to 4 days, most of the IT counters are finding some support. However, the major trend is still under pressure because on weekly scale, most of the counters are making lower top, lower bottom. But Infosys looks positive the way it opened higher and adding some positive price action. I believe upmove could be there. So with support of 1425, Infi can head towards 1500 marks. Apart from that, positive view on the counter like persistent system. Here we have seen a bullish stance. In fact, the positive consolidation breakout is visible in the stock with rising delivery volume. So with support of 5180, it can head towards 5450 kind of level. So Infi and persistent system could be two preferred name in Nifty IT basket.
Okay, that's the view on IT. Persistent from the mid cap pack, also looking good on the charts. But let's talk about a BPCL reported numbers. Plenty of leg up for good news, in fact, for some of these OMCs. For BPCL, numbers have been pretty okay. Recently the cabinet has approved 30,000 crore rupees as compensation for LPG under recoveries. Brent is also now sub $66 per barrel level. In the last 5 days, we've seen a good traction for BPCL, at least at somewhere around 3% up. It's at 324, moving towards the 52-week high of
कितना होगा?
376. Would you expect levels of 400 anytime soon?
Yeah, so talking about BPCL, the way crude witnessed some consolidations, or the most of the oil marketing company witnessed buying interest, we have noticed that 300 formed a major support in BPCL, and after that it has been making a high top, high bottom. So I believe with support of 315, one can look for an upside target towards 340 kind of level in BPCL.
Okay, 340, that's the immediate upside for a BPCL, but the 52-week high is somewhere around 376 or thereabouts. But let's talk about United Spirits then. Numbers came out and the stock is up somewhere around 0.8% or so. Largely in line, profits were down 13.7%, revenue was up somewhere around 8.5%, margins came in lower at 16.3% vis-a-vis 19.5%. Looking at the stock action, hasn't really done much in the last 5 days, last 1 month as well. It has given negative returns, but what's your call? Would you say cheers to United Spirits or steer clear of it?
So, I think some support-based buying could be there, and I believe some consumption theme could be in focus. So, I don't have any other choice to say cheers on the counter. I believe 1292 could act as a major support, and slow and steady it can head towards 1360 kind of level.
Okay, that's the view. 1360 kind of levels can be expected on a United Spirits in a slow and steady manner though. But Deepak Nitrite, that stock is reacting to earnings. It's down somewhere around 4%. Profits skid somewhere around 45%. Revenue was down 13%. EBITDA slumped almost 40%. Margins came in lower at 10% vis-a-vis 14.3%. And the stock, of course, clearly being punished. In the last 1 month as well, the stock has been out of favor, down somewhere around 9% or so. YTD, the stock is down 30%. Given the fact that the stock has been an underperformer, how would you really approach this stock? Because it's approaching its 52-week lows as we speak. In fact, it also hit its 52-week low of 1775.
Yeah, so structure of the counter is negative and the stock is trading near its multiple months low level. Every small bounce is being sold. In fact, in last 3 days, we witnessed a recovery, but again, selling pressure is clearly visible. So I believe overall under pressure or underperformance could continue till it remains below 1840. Stock has potential to go down to a 1720 to 1700 marks.
Okay, structure looking weak, and of course the stock is headed lower. But let's shift focus and take up some viewer queries then on that note. Starting off with a query on hospital space rather, Nana Prakasam has written and he wants your thoughts on Narayan Health in the short term. We saw Apollo Hospital perk up quite smartly yesterday, hit a fresh 52-week high as well. Narayan Health has also been doing well. Hospital stocks in general have been doing well. If somebody wants to, take a bet on Narayan Health, should one go ahead or should one look at names like Apollo Hospital?
So I'll prefer more on the lower slab and Apollo Hospital. But yes, if someone is asking about NH, I believe bottom out approach already has seen in the counter. In last 30 days, the stock has seen a corrective move from 2370 to 1700 marks. And now it has bottomed out in this week, getting its lower top, lower bottom. However, upside could be kept, but some sort of support based buying could be there. So with support of 1790, it can head towards 1880, 1900 marks. But still, I'll prefer for Apollo Hospital and lower slab.
Okay, Apollo Hospital and Laurus Labs would be preferred. That's the call. Let's take up a query on Varun Beverages then. This one's coming in from Varsha Gajjar. I think she's making a loss here. She wants to know whether she should exit. She hasn't really shared her buy price with us, but the stock hasn't been doing much in the last 5 days. It has seen good traction in the last 1 month or so. But if somebody is making a loss here, should they exit or should they look at buying more, or how should they really approach?
So the good part is the stock is forming higher base. Earlier hurdle used to be at 470, that shifted as a support. The next support shifted to 490, 500. So the base is shifting higher. However, momentum is missing in the counter. So if she can hold for positional, I think better to hold. 480 is major support. Slow and steady, it can head towards 535 to 550.
Okay, slowly and steadily it could move towards 535 to 540. That's the call on Varun Beverages. Hope that answers your query. The next one on our feed is coming in from Debu K on Hindalco. We've already discussed that. Perhaps you can go back in the feed and listen into Chandan's answer on that. But next one is on a CAMS from Anunay, and he wants to know the medium term outlook and whether one should look at buying it with a medium term perspective. The stock is up somewhere around 1.5%. Last 1 month it has shed somewhere around 6% or thereabouts. Is it a good buy for the medium term?
Yeah, so medium term point of view, stock has seen a corrective move and now bottomed out. So risk reward ratio also favors with negation in lower top, lower bottom. In fact, the capital market theme again started to be in buzz. So with support of 3810, look for an upside target towards 4,000, 4,020.
Okay, that's the call. You can look at the stock from a medium term perspective. Next query from Pooja Khanna. She wants your thoughts on a Supriya Life and she's bought it at 705. She wants to know whether she should average at current levels. Of course, she's making some bit of a loss here, but the stock has, seen 10 to 11% being shaved off in the last 1 month. If you look at the 6-month chart, YTD charts, has been in a downtrend, so to say. A good time to average?
So I can't say for average, but just wait for some stability because the stock has been making lower top, lower bottom from last 23 days, corrected from 700 to 600 mark. 600 is major support. So as of now, if holding the position, keep the support of 600 for a recovery towards 700 plus.
Okay, that's the view. Keep holding on to it. That's the view. I hope that answers your query. The next one is coming in on a Tata Power. This query has come in from Mukul Vaidya and he wants to know your thoughts. He's bought it at 401 and wants your view on whether he should hold on to it and for how long, because last 1 month the stock has lost some bit of traction. What would you advise him to do?
Yeah, so stock has been correcting from last 2 months, or in fact 1.5 months. Already it has seen a corrective move from 416 to 376. So structure is negative, but yes, already holding the position. So wait. As of now, the trading range is likely to be in between 375 to 400. I think this range will applicable for next 3 to 4 weeks.
Okay, that's the call on Tata Power. I hope that answers your query. The next query is on an SBI. This one's coming in from Komal Makecha. Wants to know your thoughts on the stock with a 6 months to 1 year time horizon. The stock did see good traction post numbers, but last couple of days PSU banks have kind of lost some bit of momentum. Particularly for SBI, what kind of level should one anticipate for the next 6 months, perhaps 1 year?
Yeah, so if someone is asking about PSU banks and for 3 months to 1 year, I think one should definitely go. In fact, buy the counter or can go with PSU ETF as well. I believe the SBI has formed the bottom at 785, higher base could be at 800, and this time it can head towards 840 and then probably positional target towards 950 to 980.
All right, that's the view on SBI. You can go ahead if you're looking at the medium 6 months to 1 year kind of a perspective on this particular stock. But the next query is coming in from Vinod Patange. Once again, it's on the metal pack, but it's on stocks like JSW Steel and Tata Steel, because he's making a fair bit of profit on these counters. On JSW Steel, he's making a profit of 25%. And on Tata Steel, he is making a profit of 15%. Do you think he should hold on, given the fact that metals have been shining bright, this week, and dollar index has been cooling off? So, do you see more leg up on these stocks, and does it make sense to hold on to them or book partial profits?
See, profit booking is not a bad thing in such kind of market scenario, but JSW is one of the positive to range bound counter. As of now, 1020 is the support. Till it holds about 1020, it can go to 1060. But above 1060, I believe fresh leg of rally could be there. So as of now, positive to range bound. If holding the position, then on immediate basis follow the support near 1020. Looking at Tata Steel, this stock has seen a consolidative move. Upside barrier is clearly visible at 165. Above 165 only fresh leg of rally could be seen. So partially profit booking can be done and try to bargain buy near 148 to 150 levels.
Okay, that's the view. I hope that answers your query. The next query is coming in from Shayantan Deb, and he has a query on Force Motors. And this stock, kind of a multi-bagger, so to say, in the last 6 months, it has given 200% returns. In the last, 1 month as well, it has rallied 20%. Today, of course, some bit of profit taking. But your thoughts, do you think it is fast approaching its top for the short term, or do you see more upside?
So I believe upside is intact. Major trend is positive. Counter has given a return of 200% in this year, rallied well from 6,500 to almost 20,000 marks. Even on the weekly and the daily chart, it has been making high top, high bottom. So till it holds above 19,000, continue to ride the momentum for 20,500 to 21,000.
Okay, that's the view. Uptrend intact for a Force Motors. Next query is coming in from Anand Roop Bandopadhyay. Wants to know your thoughts on Sun Clay for its breakdown. Sundaram Clayton, I think that's the stock he wants to know about. In the last 5 days, I've seen the stock is gaining somewhere around 2% or so. It has been showing some kind of an uptrend. So, how would you really look at this stock? Is it worth looking at right
Yeah,
now?
so
I think there's been some issue with his feed. We'll try and get it back, but let's shift focus and see what the market is doing. All the opening gains have kind of fizzled out. The Nifty is just about struggling to clutch on to the positive zone at the current juncture. 24,620 is where we are at when it comes to Nifty. The mid cap index has also given up most of its gain, but the breadth is still in the positive. 1260 advances to 1126 declines. If you look at some of the gainers, then IT is clearly in favor today. The likes of Infosys, Wipro, they are among the top gainers, and TCS is also gaining, and so is Tech Mahindra. But looking at some of the pharma names, they are continuing to see good traction. The likes of Cipla, Dr. Reddy's, Sun Pharma, all of them are doing well. Life insurers are doing well. Both HDFC Life and SBI Life are in the green. Trent, Titan, some of the consumption names also doing well. From the private banking names, you have HDFC Bank, IndusInd Bank that are in the green. But then there are some banks that are trading in the red. I had spotted Axis Bank that was in the red at the start, but I think it's kind of cut or trimmed its opening losses. But what's not doing well now are some metal names: Tata Steel, Hindalco, Coal India, JSW Steel. All of them are in the red as we speak. ONGC, that's another one that's down 1.5%. Bharat Electronics, yesterday defense was in favor, but today BEL down 1%. Adani Ports, NTPC, Hero Motocorp, Geo Financial, these are some of the other laggards. Eternal also trading in the red. But let's touch base with Chandan and see if he can hear us. Okay, so we were talking about Sundaram Clayton, Sun Clay. If you track the stock, tell us your thoughts on this particular counter.
Yeah, so if you look at this stock, it has been making lower top, lower bottom on the weekly chart from almost 10 weeks and trading at multiple months low. I think the lowest level since September 2024. So structure is negative, and we have noticed that every small intraday bounce is being sold and stock is trading below all key moving averages. So as of now, the suggestion is better to avoid till it remains below 1750. It can go down to us next meaningful support at 1575 to 1550 levels.
All right, that's the view. It's an avoid right now. Hope that answers your query. But let's talk about some of these railway stocks as well. Okay, we'll come to railway, but I have a query on BEL, Bharat Electronics, from Priya Prathab. She wants to know the next target on that particular stock. Defense stocks have once again seen some bit of traction. Yesterday, BEL today, although is trading in the red, but any levels in terms of BEL to watch out for in the immediate future?
Yeah, so Nandita, most of the defense counters are witnessing some profit booking from last few days, but BL has given an early sign of the bottom out approach and has been consolidating in a range from last 3 weeks. And before that, the counter had seen a corrective move from 436 to 376 marks. It has been consolidating, flirting near its 50-day exponential moving average. Now it requires a decisive hold above 393. So about 393 short-term bottom could be placed for an upside target towards 410. But at the same time, we need to keep in mind that major support exists at 376. So 376 to 393 is the immediate trading bid, and it requires a decisive range breakout or getting an early sign of bottom out approach in the price pattern.
All right, that's about BEL. But last query for the day then. This one's coming in from S. Tyagarajan, and he's written to us all the way. I think his name is Raj, and he's written to us all the way from Vietnam. So let's get his query answered as well. He wants to know your thoughts on Bajaj Housing Finance. Of course, the stock has seen a very smart recovery after being range bound for a long time. Today, the stock is up 4%. Would you advise buying at current levels?
So yes, great to have the question from the Vietnam as well. I think the question is related to Bajaj Finance, right? So we have noticed that
It's on Bajaj Housing.
Bajaj Housing.
Bajaj Housing.
So yes, yeah. So Bajaj Housing has seen some consolidative move in last couple of days, and we have noticed that support-based buying is visible. In fact, today the momentum is clearly visible. So the price pattern should be positive, and after the immediate lower top, lower bottom structure, the support-based buying is clearly visible. So with support of 107, I believe up move could be seen towards 120, 122 levels.
Okay, that's about Bajaj Housing. Hope that answers your query, Raj. And do keep sending in your queries. We will get them addressed by our experts. But with that, Chandan, would like to thank you for taking out time and joining in and sharing your thoughts with us. Wishing you a very, very happy Independence Day, and let's hope that we wrap up this Independence Day week in style, because we are in the green for the week thus far. Today's price action will determine whether we end this week in green or not, because Nifty is up somewhere around 1% or thereabouts. Hopefully, we should close the week on a positive note. But we'll see you soon. Thanks a lot for joining in, and have a great long weekend.
Yeah, thank you so much, Nandita, and let's hope the market gets the recovery and negation of the lower top, lower bottom of last 6 weeks. And I think that will be the real the bullish stance for the market. But yes, definitely we all are set and moving in the vibe of the Independence Day celebration. So wishing everyone happy Independence Day in advance, and let's celebrate the milestone. And I think market has long way to go. I think the recent volatility or the decline is providing the opportunity to start the next leg of rally in the Indian equity market.
Let's all hope so. Fingers are crossed. And like you said, fir bhi dil hai Hindustanis. I would like to leave it at that. Thank you for joining in, and it's always lovely chatting with you, Chandan.
Thank you so much.
Thank you. Well, look at the market then. Before we bring on board our next guest, we are back in the positive zone, but the mid-cap index is trading in the negative zone as of now. Some bit of volatility. Of course, it was expected given the fact that it is weekly expiry today. But on that note, let's bring on board our next guest. Joining me is Vipul Bhowar, Senior Director and Head of Equities at Waterfield Advisors. Vipul, lovely chatting with you. I think this is the first time you're joining us on the show, so welcome, and wishing you a very happy Independence Day in advance. But let's talk about what's been transpiring in the market, right? We've been attempting a recovery, especially given the excessive shorts in the system. Looks like market is ready to lap up any good news because there's been so much spate of negative news in terms of tariffs. What's your sense in terms of triggers aside of what's been happening on the tariff front? What is that next set of news that one would be watching out for that could provide some bit of positive movement in the market here on?
Hi, good morning. Thanks for having me here. So I'll answer this question in two parts. I'll start with the valuations and earnings, and then bring it down to tariffs. So what we've seen as of yesterday, as we are in the result season, as of yesterday, close to 3,000 odd companies have reported earnings. And when we look at their numbers quarter on quarter, there has been a top line growth of 5 to 6% and a bottom line growth of 10%. Which when we look at the previous quarter PAT growth was 5%. Mind you, this is the median growth we are looking at. So takes into consideration the one-offs which we gets absorbed. Uh, if I if I divide this number into a single bucket, if I divide this into companies where the market cap is above 5,000 crores, and then if we look at the numbers look slightly different. The growth YOY quarter growth is 10%, which is the top line growth, and the PAT growth is 13%. So from a earning recovery, there is a good sign of earning recovery, which is what we are seeing. From a valuation standpoint, yes, there are certain pockets where there is some sort of an overvaluation, which is there. But mind you, if you look at the historical data and look at valuation, yes, it might look expensive, but there are certain structural changes which have happened in the last 5 6 years, where this is the first time we see a cleaner balance sheet across sectors, across market caps. That has led to some sort of a valuation premium over the last 10 years. Plus, you have that has led to significant ROEs and significant return ratios improvement. Plus, the incremental capex is now broadly, funded by the internal accruals and less of borrowings. So all that has led to valuation being where they are. But from an economic recovery point of view, when we look at numbers, when we look at earnings, quarter on quarter, there is improvement in the market in terms of earnings. To your point on tariffs, yes, there is a sector impact and there's a market impact. So from a sector point of view, there are certain sectors which will certainly get impacted, the likes of textiles, jewelry, certain chemicals and auto anchors will get impacted. Uh, but from a market point of view, these businesses or these sectors don't have a significant contribution in the overall weightages. Hence the market impact is not to be seen. So we might have a situation where we might have an impact on these sectors, and we might see a certain government incentives or the negotiations might change in their favor. But from a market point of view, market has already discounted or already started discounting the impact of the tariffs on these sectors and the overall economy as such.
Sure, point taken. Of course, you said that earnings are on the recovery path, but given the kind of commentary that has come in from the companies, would you bake in double-digit earnings growth for FY26?
So yeah, yes. So when we look at certain sectors, they continue to report strong earnings. So okay, let me answer this way, that the broad-based rally will no longer be visible. We'll have certain sectors doing exceptionally well, and we'll have certain sectors which will go into consolidation. So from a consolidated basis, there is still a high chance we see a double-digit earning recovery, but it's not going to be a broad-based recovery. It's going to be select sectors, select teams which will continue to do very well, and certain sectors will consolidate.
Sure. So, where do you see pockets of outperformance now post the first quarter earnings season?
So the interesting observation is that so there are sectors within the sector which are doing exceptionally well. Now, what I mean by that is, if you look at financials as a sector, you have the lending side of financials, which is consolidating, where credit growth is still lower, and there are hopes of high recovery in credit growth. Whereas sectors which are non-lending in financials, predominantly capital markets, insurance, they continue to report stronger earnings. Similarly, in healthcare is a broad term. You'll see hospitals continue to report stronger earnings. So within technology, you will see IT services consolidating, but you have platform technology businesses continue to report strong earnings. So within the sector, we have there are few themes, few segments of the sector doing exceptionally well, and this is what we're seeing continuing in the broader market, where certain sectors are performing within the same sector. While the overall sector might look consolidating, but within that sector, there are a few pockets which are doing exceptionally well.
Sure. Let's talk about the platform stocks, right? Stocks like Nykaa, Paytm, Eternal, turning the corner. And there's been a lot of traction in some of these names. Even though the markets have been correcting, these names have been doing well, right? Nykaa's numbers were good. They're expecting fashion to break even this fiscal. For Eternal as well, numbers were good. And Paytm, of course, has seen a big overhang being removed with the in principle nod from RBI for the payment aggregator license as well. Is this space looking particularly exciting now? Because Paytm also reported great set of numbers.
Yeah, so look at it this way, where the nominal growth is going to be in the range of 10 to 12%. Um, and you have this segment showing growth of 20+%. So certainly there'll be a lot of interest in looking at these themes and these businesses. Uh, the consensus says that the growth will continue, and which we also agree that we'll have these pockets continue to show a higher growth. So the platform tech companies, if they continue to report 2x the nominal GDP, there certainly be a lot of traction and a lot of interest into these themes and these businesses.
All right. What about autos? They've also seen good traction. We have a festive season right around the corner. Price action wise as well, autos have been in fine fettle. Earnings wise as well, we've seen good numbers from the likes of M&M. But in terms of preference, two-wheelers have also been doing well, by the way, in anticipation of the earnings season. What do you prefer now? What's the preference, two-wheelers or four-wheelers, or a mix of both?
Yeah. So I'll tell you how we look at the sector, and I'll come down to how which segment will do very well. See, auto as a sector goes through a shallow cyclicality. So they go through a 4-year upcycle and a 4-year some sort of a consolidation. So if we take 2018 and 2021-22, where the sector had gone into consolidation, and the previous cycle was 2014 and 2018. In that cycle, we had the likes of Maruti doing exceptionally well, where the whole demand was due to Uberization, and that is where Maruti as a business did very well. This rally, this cycle, which I would say started in 21-22. It's predominantly more skewed towards the SUV, and that's where someone like M&M or Tata Motors have done very well. So this is how the cycle has behaved in the last, I would say, 8 to 10 years, 8 to 12 years, and this is what has been played out. And that's why, in the four-wheeler space, someone like M&M will continue to do very well because they have the largest bouquet of SUVs, and that's where they continue to gain market share in that segment. But from a two-wheeler point of view, there is this pivot which is happening from the traditional two-wheelers to electric two-wheelers, and that's where, as we speak, you have the likes of TVS, Bajaj trying to gain market share. So that change is happening in that segment. So the change, the electric change or the electrification change is probably more happening in two-wheelers, whereas four-wheelers continue to see the shift from a hatchback to a SUV, and that's where M&M continues to benefit in this cycle. But overall, in the scheme of things, we should see the numbers which you saw in the last 3-4 years should consolidate. Should consolidate, yeah, at current volumes.
All right, that's the view on autos. Last question, really. What should be a reasonable return expectation for this year? We are still in the positive. We are up, a good 4% YTD, but we still have 5 odd months left. Given what's been happening in terms of tariffs and of course some bit of slowdown in growth as well. What would be a reasonable return expectation for this year? And since we are talking about growth and interest rates as well, do you think we are in a prolonged a pause when it comes to the rate trajectory as well, or do you expect one more rate cut for the year?
So from a rate cut point of view, we believe it will be a pause for now, and of course we'll have to wait and watch how US Fed reacts to their rate cut cycle, and that's where probably we'll monitor those changes and then form a view. In terms of recovery or some sort of return expectation, what we are assuming is a 10% earning growth. So let's assume, I'm just rounding off numbers. Let's assume a 1200 EPS for Nifty 50 this year, and markets are always forward looking. So if you look at another 10% earning growth for the next financial year, so anywhere close to 1300 EPS at 20 multiple, Nifty should be at 26,000. So we are broadly there in terms of 1 year forward earnings, and that is the kind of expectation one should build in. So anywhere between, I would say, 8 to 12% is the return expectation one should build in terms of returns in the large cash space.
All right, that's the view then. Vipul, with that, would like to thank you for taking out time and joining in. It was a first chat, but hope to see you again on the show sometime soon. And of course, wishing you a very, very happy Independence Day as well.
Sure. Thank you, everyone. Happy Independence Day to everyone, and hope let's have a bull year.
Of course, let's hope that. Thanks a lot for joining in.
Thank you.
Well then, quickly take a look at what we are doing in terms of the market movement. The Nifty is now up somewhere around 40 points or thereabouts, fair bit of volatility. But the mid cap index has slipped into the red, and the breadth is has also now reversed because it is skewed in favor of laggards. Bank Nifty is gaining strength. It's up somewhere around almost 0.5% or so, and IT names doing well, and some of the pharma names also doing well. But what's not doing well, some of the metal names like Tata Steel, JSW Steel, Coal India, etc. But with that, we've come to the end of this edition of Opening Bell. Would like to thank you for joining in, and of course staying with us and sending in your queries. Keep doing that. Wishing you a very, very happy Independence Day. Tomorrow being a market holiday, we'll see you, of course, first we'll see you on closing bell, and then we'll see you on opening bell on Monday. But have a great long weekend, and wishing all of you a very, very happy Independence Day from me and the entire team of Money Control. Thank you. Have a great day.